Can you believe 2026 is already knocking on the door? It feels like we just started the 20s.
I know, right? And you know what that means? It's prediction season.
Oh boy. Are we grabbing the crystal ball?
We are. We're breaking down 6 massive housing market trends for 2026. And look, as Yogi Berra said, it's hard to make predictions, especially about the future.
He wasn't wrong, but we've got some solid data to work with. So let's dive in.
All right, trend number 1, home sales. We've been sitting at these generational lows for like 3 years now. Is 2026 the year we finally blast off?
Blast off? No, but maybe a gentle liftoff.
Okay, manage my expectations.
Basically, don't expect a sharp rebound. The pieces are there for a modest uptick, but we aren't going back to the frenzy of a few years ago. It's going to be a slow climb.
So what's actually driving that little uptick?
It's a combo deal. First, inventory levels are higher than they've been since 2019.
That's huge.
It is. And second, mortgage rates are lower than they've been since 2022.
So more houses to buy and slightly cheaper loans to buy them with.
Exactly. It's enough to nudge sales upward, just not enough to cause a stampede.
Let's talk about everyone's favorite topic, prices. Are they crashing, soaring?
Neither. The prediction for 2026 is flat.
Flat? That sounds boring.
Boring is good. The main reason is that higher inventory we just mentioned. It puts downward pressure on prices.
Makes sense. Supply and demand. We even saw some dips last summer, right?
We did, but they faded by fall. So expect stability.
But wait, if inventory is up, why aren't prices dropping further?
Because sellers are stubborn. Or let's call them responsive.
Responsive how?
If they don't get the offer they want, they just delist. They take their ball and go home.
Ah, so that prevents the market from bottoming out.
Exactly. That restraint stopped a massive slide in 2025.
Okay, trend 3 is about that inventory again. When does it get back to normal?
We're looking at a return to pre-pandemic levels nationally in 2026, probably by the spring selling season.
That feels like a milestone.
It really is. There's actually a shadow supply out there, people who canceled listings and are just waiting for better timing.
Waiting for the perfect moment to pounce. So with more inventory, what does that mean for the negotiation table?
It means buyers finally get some leverage back.
Music to my ears.
We're seeing more discretionary sellers, people who will sell, but only for the right price. That means homes sit on the market longer.
And a home sitting on the market longer means a buyer has time to think, breathe, and negotiate.
What about the folks who still can't buy? Is 2026 their year?
Unfortunately, homeownership is still out of reach for a lot of the middle class.
That's the tough reality.
Yeah, but rent growth has slowed way down, so a lot of people are opting to rent single-family homes instead.
So they get the backyard and the space just without the mortgage.
Exactly, biding their time comfortably.
Let's zoom out to the economy. It was a bit of a roller coaster in 2025.
Wobbly but standing is the phrase. We had some shocks, but companies are actually beating earnings estimates now.
And what about all that trade drama?
It's cooling off. Mentions of tariffs are down and new trade deals are easing restrictions. It looks like the economy is finding its footing again.
All right, final trend, the big one, mortgage rates. Give me a number.
Okay, don't hold me to the decimal, but we're likely staying below 6.25%, and maybe, just maybe, dipping below 6%.
Sub 6%? I'll take it.
The Fed is cutting rates and the spread is normalizing. But hey, don't expect 3% again.
Fair enough. Stability is the name of the game for 2026. Thanks for breaking it down.
Anytime.